Trading is closed on February 14th, 2023. As always, we'll start with our disclaimer, go over our calls, and then make some predictions. It's going to be hard to predict this because I have signals as mixed as I've ever seen them. So my trading plan for Wednesday, February 15th, 2023. Please remember, I can be wrong. Any trade you make should be at your own risk. We said yesterday that the price index announcement came out before the open and I couldn't predict it with any degree of accuracy. I did say that we should have the pattern with the early low, which was this, and tomorrow should also have the early low. We said if we couldn't take these highs out early, we should trade lower even if we didn't close lower. We traded lower but closed unchanged. This is a reminder of what we said. Tomorrow has the early low. We gapped down, hit lower lows, closed over all the lows, and that's a bullish pattern. What's not bullish is that we overtook previous highs any number of times and closed under the highs, which means this big rally didn't accomplish anything. This is a pattern of mine I call the diamond on stilts. Here's a stilt and here's a diamond. The pattern is not required to go to completion, but often it will. And if it goes to completion, not a requirement, you get a stilt-like move down. There's support resistance right at the origin of the left stilt. If you gap down, usually you get support right under the origin of the left stilt, but if you go through it, that becomes resistance. Pattern doesn't have to play out, but often will. During the day, we gapped down, had a huge rally, right at the high. MEJT said ultimately lower prices should print. They did, and MEJT said that wouldn't stick, and the price would retrace to 4148.43. We came awfully close, but not close enough, so that's our target. If we don't gap down smartly, the rules call for this to print by early Thursday. But I'm not convinced we're not going to gap down smartly. We also almost always leave an unsatisfied MEJT target at major changes in trend. The afternoon, MEJT said ultimately higher price it would print. Said this move up wouldn't stick, said these drops wouldn't stick, and that's played out. We got the minimum here, satisfying the ultimate buy signal. Almost always you get more than the minimum. By a small fraction, we traded more than the minimum right at the end and immediately rejected it. The MEJT system, this is called a direct hit. When you need confirmation that tomorrow's open, when we open up here, this doesn't mean a thing. But many times, not always, but many times, when you get a direct hit, a quick reversal right at the minimum target, you get a sharp move down. So in addition to the diamond on stilts, we have another pattern here, which often, but not always, leads to a sharp drop. To add to the confusion, this is what happened in the pre-market. We had these wild swings, and in terms of time, these can occur near market highs. We also had a huge increase in futures volume, which tends to occur near lows. Not very helpful. Here's where we are in my long-term count. I think we're in wave Red Sea. Now we said yesterday at this high we're taken out. This idea for the count would be killed, but some counts refuse to die. I can count this as 5 waves up. And this wave B has an A bracket, C bracket, A, B, C bracket, and C has a good relationship to A. There are two ways to count this. You can count from the beginning to the end. And that's pretty much at the 78.6, or count from the high to the low, and that's right at the 61.8. So we have an ABC here with good fibs. We also have here what could be an Indian diagonal triangle, although I'll grant you it's not the only way to count it. But if that's A and that's B, these are all three-wave structures. And if that's what it is, there's a target to retrace to the origin. So that's one more pattern compatible with a sharp drop. None of these have to play out, but the patterns are there. If we do get a sharp drop, you would like, on a larger time frame, you'd like wave A and C to have some kind of Fibonacci relationship. And you'd like A and C to have some kind of Fibonacci relationship too. And if you set A equal to 50% and C equal to 100, you get price targets somewhere in the 39.30s or 39.20s where these line up. It isn't as perfect as I'd like, but if you're somewhere in the 39.30s, 39.20s, could be close enough. I also have a large number of unsatisfied MEJT targets in that area, which would offer support if they're hit. We use the mixed signals rules, which are here. Tomorrow's pattern has the early low. Doesn't mean you won't gap up. Typically it's a rally day with a final hour high, but if it's weak, more weakness should follow in days to come. And if it's going to be weak, almost always it'll be weak early. Otherwise you get the normal bullish pattern, usually. There are mixed signals. It's bullish. There's a higher MEJT target. If we don't gap down smartly, the rules say it prints. We gap down, hit lower low, closed over intraday lows. The volatility index is on the Bollinger Band reversal buy signal, and futures have a volume spike. All these occur in terms of time close to lows. But it's negative. The wave count argues for a top here, and we almost always leave a unsatisfied MEJT target at major changes in trend. Numerous trips over prior highs couldn't manage a close over those highs. MEJT had a sharp reversal after hitting an optional target late today, so if, and that's an if, there's early weakness, tomorrow's normally bullish pattern usually doesn't play out. And if the late high holds, there's wave balance in the 39.20s, should be 39.20s or 39.30s, where there are numerous MEJT targets but should print at some time. So if we get one of the market's rare, underline the word rare, crashes, if that happens, and we drop about 200 points that week, this week, into the 39.20s, 39.30s, then the timing models of other people would be in sync for a major low. Now, none of this has to happen. The signals are mixed, as I say. But if we do have early weakness, if there is a big drop down early on, it would make a pretty picture, not a guarantee. If we had a very sharp drop of about 200 points this week and hit a major low, it would certainly explain a lot of these conflicting signals that I have. And if it does not happen, we don't get the early weakness, you don't have to risk any money on it. At least I won't. So tomorrow's pattern has the early low. We're on guard to see if we get early weakness, which could lead to a rare crash. but the signals are mixed, and we'll have to use those rules and use that caveat if we don't get the early weakness. And that's today's call.